Welcome to the Silent Trading channel on Friday the 10th of April. Today we'll be going through the gold chart to see whether right now it is in a bullish or a bearish trend, right? And to see if the trend is really on the side that it was supposed to be or not, right? But before we start, please subscribe, like, comment and share if you like this video and to support me in my trading journal. Okay. So we'll be going through the 4 hours chart today first because, why is it? Because the 4 hours chart is the most optimized chart to enter a trade based on reasoning that it is in the middle of all time frame that was used by all kinds of traders to trade. So the one in between every other time frame, right, will be the best time frame to enter a trade based on both reasoning from traders trading on a lower time frame and traders trading on the higher time frame. So the middle one will be the best one because it will be a balance of accumulation of volume from both higher time frame and lower time frame, right? So the best will be the middle one. Okay, so right now, as we can see, the price action on the 4 hours chart right now is bearish. Where is it bearish? Where is it bearish? It is bearish from this reversal over here because this is a bearish reversal, or we call it a bearish price action, correct? Because it has pushed down and managed to break support, which means this is a complete bearish price action, which is also a valid bearish price action, right? So after this complete bearish price action, price is said to be going down rather than going up. But right now, this chart is moving in a sideways direction, right? Not even going down and not even going up for the whole day today, which means the problem right now in the chart is that there are sellers below, there are buyers above. That is the reason that the chart is forming a triangular frame, right? A triangular frame to trap panic buyers and panic sellers, right? A triangular frame is used to trap panic buyers and sellers, correct? So we see that there is a triangular frame that the 4 hours chart is trying to form. And 4 hours chart forming a triangular frame is telling us that there are buyers above, there are sellers below, which means right now it is moving in a sense that it is pressuring both buyers and sellers to close their position, right? And after buyers and sellers are being forced into closing their position, only then will the chart break. But the problem is, if both buyers and sellers close their position at the same time, the chart will break according to the price action. The chart will break according to the main price action on the higher time frame. But if sellers over here close their position first and there are buyers above, the next thing the chart will have to do is, right, if sellers close their position below, the next thing the chart will have to do is, after sellers close, buyers is above, the chart will dump, right? Why is it going to dump? It is dumping to force buyers above to close all of their position. Only then will the chart start reversing and form a bullish price action like this, right? This is only one scenario. But if the chart, right? But if in a chart, the buyers close their position first, right? If the buyers close their position first over here, right, and sellers are still below, the next thing the chart will have to do is to what? Is to break above, right, and break resistance. And after breaking resistance, the next candle retracement is a retracement to taking out buy side volume, right? Buy side volume from panic buying. And after buy side volume is being taken out, the next thing the chart will have to do is break above and then start to break the next resistance, which means a continuous break of resistance is telling us that the price action is on the bullish side, right? So all we need to do is we wait for price action to be revealed before we start buying, before we start selling. So how do you know that people are going to close their position over here first or over here first? We do not know. But the thing is, we do know that if someone is closing their trade either over here or either over here, or another thing that can make the chart break is that when a chart push up to attack resistance, the market start to have sellers being accumulated in the chart, and after sellers are being accumulated continuously, the chart will start expanding above continuously too, right? So when we look at the chart, we look at the chart and find out where are the most possibility on the spot that people are entering a trade, right? For example, like this resistance over here, will traders be entering a trade over here? If traders are entering a trade over here, which means this is a spot that the market is using to accumulate sell side volume, which means if the candle push up to attack this resistance, sell side volume is being accumulated, and if sell side volume is being accumulated, the chart is then set to expand above further and further, right? So there need not be people closing their position, right? There doesn't always have to be people closing their position before the chart can break above, but right, new volume accumulation, right? New volume accumulation can also be the trigger for the chart to break, because once people start buying, once people start selling, and if at the same time there are quite a number of volume, right? Quite a heavy accumulation of volume at a few specific spots that are accumulating, that is a spot where the chart will start breaking above, the chart will start breaking below. And if breaking above is not enough to take out sell side volume, the next thing the chart will have to do is to start climbing up slowly and slowly, which is what I call ascending, right? The chart will start climbing up slowly, candle by candle, and after accumulating more and more sell side volume and it is deemed enough, the chart will then break above, and a break above will be a heavy expansion above, just to taking out those sell side volume. And the same thing for buy side volume. If buy side volume is being accumulated and a heavy accumulation at that, the chart will dump, and not just a small dump, it will be a heavy dump below, right? A heavy expansion below. So whenever we are going to enter a trade, try to compare whether right now most of the traders are buying or most of the traders are selling, and we do not enter a trade that we think that most of the traders are entering, right? When a chart is trying to attack support, we know that support is being used to accumulate buy side volume. We will not be entering a buy side position as support, right? So when we look at the chart, we look at the chart based on price action and also human psychology. So right now the chart is breaking above. Will it be able to attack this resistance over here? If it is able to attack this resistance over here and then make this price action becomes a valid bullish price action, we will then count this as a bullish price action and then start buying at the next retracement, right? So if this candle over here managed to push up, attack this resistance and also close above this resistance, the next candle retracement is where I'm going to be buying, right? Because why? Sellers are being accumulated over here, which means the next candle retracement we're going to be buying, because sellers needs to be taken out, right? And after sellers is taken out, we'll be closing our position, our buy position over here. We'll be closing at the next high, and then wait for the next price action to be revealed before we start buying and selling once more. Okay, so for today, that is all I'm going to be analyzing for you guys, and we'll look forward to see how this week's candle is going to be closing and how the daily candle is going to be closing, and then we will find, right, we'll do our analysis tomorrow and find the best possible spot to enter a position for the next week. Okay, And I look forward to seeing you guys tomorrow and every day after tomorrow that I'm gonna be here analyzing for you guys. So for today, I'll see ya.